All right, so here's a little video, quick little video. This is just a easy, simplified version. So I will release a more complex version, but this is just extremely simple. So we are right now looking at Ethereum, right? And usually you do have a volume indicator built in, but what I want to try to show with this video here is how you can trade purely based off using a volume indicator. So volume is very important, right? It tells you where the money is going, right? So when you have a green candle, green volume candle that is bullish, when you have a red candle that is bearish, right? So if you, for example, would pull up a 4-hour chart of Ethereum, right? What do we notice before each spike? Like this one, for example, or this one is we do have periods, in this case 4-hour candles of consolidation. So we don't have much activity going on. So here you can see after this drop, if you were looking at the chart in real life and you were about to make a trade, let's say we were here, 22nd April 2026. We see this huge drop here. We observe the chart, we see consolidation because the price is moving sideways, right? And what do we see? We see that we had 1.33k. You can look up here for the volume. Here we have 1.88k, 2.58k, 1.33. You see how volume now, you see here 400 and 1.19. You can see how we here just completely drop in volume. And then here we start to see in this candle 3000. You see a volume push up right here. When we have consolidation on candles and we then after some consolidation we start to see more activity coming into the market with a bullish candle forming in like this one, we enter here and we put a stop loss right here. And then if we would have entered, let's say at this point with leverage, we could have made, if we used 10 leverage, we could have made 20% on this move right here, for example. So, or for example, here you have down in the market, and then here you see the consolidation. You see a strong sell candle right here, and then we see a drop in the size of bullish candles. Here we see a little push up, and then here you have a massive candle right at here, and then price consolidates upwards because we don't have any big bearish candles to push the price down. You see this big candle, we enter, price consolidates upwards because we don't have a lot of selling volume, and it continues to consolidate upwards. We see a sell candle that fails because you see here this volume was bigger than these, but we didn't push the price down, followed by a large, nearly 5,000 Ethereum candle, volume candle right here, pushing the price even more up. And then here you see a strong sell candle right here, which could give us an indication that the bears are taking over, which they essentially do before they push the price up. And note how you see large selling candles after some period of time. Here you see a large selling candle, here you see a large selling candle, here you also see a large selling candle, and price it enters a bearish downtrend basically, okay? So, and here you can see after some period of consolidation here in the market, when the price moved up, down, sideways, you start seeing large selling candles coming into the market here. Here you have three bigger selling candles, price starts to advance down. And here you have three large massive candles, and you see how price advanced down. And so this is just examples. And here you can see, for example, after some consolidation here, you start seeing bullish candles coming in, large selling candle, followed by huge bullish candles pushing the price up. If you can identify big volume spikes, either bearish or bullish, that is to your advantage to trade. So, but this is just a very simplified version. but we will move into more complex how to detect, volume and price action, when to buy and sell. So we will come to that later. So just make sure to like and subscribe, and I will see you guys in the next one. Peace.